Hello guys, Fred here from Pro Tennis Trader. I hope you're well. In this video, I'm going to introduce you to what I believe to be the 7 habits of highly effective traders. Essentially, the 7 habits that you need to adopt in order to develop the mindset of a highly effective and profitable trader, which often is one of the biggest hurdles that most traders need to overcome, but without realizing it. Now this is why I attribute a large section of my training course on developing a trader's mindset and not simply focusing on the trading strategies. Now hopefully you've heard of the 80-20 rule. Now this rule was developed by Pareto and is often applied to a number of situations including business and of course trading. Now the Pareto principle states that for many outcomes, roughly 80% of consequences come from 20% of the causes. In business, this might be that 80% of your business comes from 20% of your customers. In trading, I believe, as do many of the top traders, success comes from 20% strategy and 80% mindset. Now Tony Robbins sums up the 80-20 rule in terms of life success as this: I found it's 80% psychology and 20% skills. Now this 80-20 rule is widely accepted and practiced principle in psychology and specifically within business, investing and trading. So given that our mindset is so important to the success of our trading, let's take a look at the 7 habits of highly effective traders. Now these habits are not in any particular order. They should all be regarded with equal importance and worked on and developed upon equally. So habit 1, treat trading like a business. Now if you've taken any of my courses, you will see that I really try to drill this into my students right from the start. If you treat trading like a business, then it will pay you like one. Now there's nothing wrong with trading for fun, but winners are those who treat trading like it is a business, complete with business plans, daily routines, schedules, and obligations. Now self-discipline and seriousness will help you to become much more profitable over the long term than simply just the odd lucky trade here or there. Now if you make the decision to turn your trading into a business, then you have straight away increased the chances of success. Habit 2, proactivity. Now Stephen R Covey, in his famous book The 7 Habits of Highly Effective People, explained this habit as being proactive is about taking responsibility for your life. You can't keep blaming everything on your parents or grandparents. Proactive people recognize that they are responsible. They don't blame genetics, circumstances, conditions, or conditioning for their behavior. They know they choose their own behavior. Reactive people, on the other hand, are often affected by their physical environment. They find external sources to blame for their behavior. If the weather is good, they feel good. If it isn't, it affects their attitude and performance, and they blame the weather. Now great traders know that the markets are constantly adjusting and transforming, and that rarely any event will always follow the same exact set of circumstances, especially if we look at tennis trading. Now because of this, they never rest on their laurels. They are constantly reading up on trading, testing out new techniques and improving their game. This is one of the single best traits you can cultivate to become a highly successful trader. So I would say there are 2 parts to this habit of proactivity. Being proactive in developing your strategy and skills as a trader, but also the ongoing development of your trading psychology. Habit 3, be passionate but not emotional. Now I've mentioned a number of times in other videos and also in my courses that trading should not be a psychological roller coaster. You should not be ecstatic one minute when a trade goes your way and then down in the dumps the next minute if a point or two or a trade or two goes against you. Yes, it should be enjoyable and you should have a passion for it, but you should never allow emotion into trading. Habit 4, sharpen the saw. Now I'll admit, much like the proactive habit, I've taken inspiration from Stephen Covey's 7 Habits of Highly Effective People again here, as it is totally transferable and relatable to trading. Now, you may or may not be aware that I also run a website called Side Gig Junction, which helps people to start up their businesses. And one of the programs I offer in the Side Gig Academy is the 7-day Kickstart. Now, here is an excerpt from the 7-day Kickstart, which will demonstrate perfectly what I mean by sharpening the saw. I would like you to imagine that you're walking through the forest and you come across a guy cutting down a tree with what appears to be a rather blunt axe. He looks exhausted. So you ask him how long he's been cutting down the tree. For hours, he replies in a very disheartened and fed up tone. So you reply, why don't you sharpen that axe? It looks pretty blunt to me. It's going to take you all day at this rate. He replies, I don't have time to sharpen it. I just need to cut down this damn tree. So you explain, well, if you were to spend 1 hour sharpening the axe, it may only take you a couple of hours to cut down that tree. You don't have time not to sharpen that axe. Now, this example can be applied to loads of areas of our lives, not to mention starting a business. If you invest in the right tools for the job initially, then you are much more likely to make a success of your new venture. Now, you can see that this excerpt is focused primarily on starting a business. Well, habit 1 was treat trading like a business, so it is directly transferable to trading. Essentially, a highly effective trader invests in the right tools for the job to get the job done. He or she will invest in the right education, will continue to develop with further education and self-development, and will have the right software and equipment needed to carry out their trading in the best possible way. Habit 5. Self-discipline. Here are 4 rules that you can incorporate into your life to become more self-disciplined. Start out by being honest with yourself. You will see both your successes and your failures. It is necessary to see both in order to develop self-discipline. This is because you need to be able to recognize mistakes that you make, not only in your trading, but in other areas of your life, so that you can stop making them. But it is just as essential to be able to see your strengths, so that you can keep these strengths going and build upon them. Secondly, try challenging yourself to not only be more disciplined with your trading, but also with other aspects of your life. Have a think about a bad habit that is perhaps having an adverse effect on your life and that you want to quit. Maybe it's smoking or drinking. Maybe you want to learn how to get up earlier in the morning, or actually get 8 hours of sleep every night, or simply get fitter by joining a gym. Try working on some of these goals as well. They will help you to become more disciplined and, of course, healthier. Thirdly, keep your goal in your mind at all times. Goals need to be kept realistic. It can be helpful to think about just not how much money you will make, but also why you want to make that money. What do you plan to use it for? This can help you to stay focused and motivated when the going gets tough. Now, discipline is a means to an end, although developing it can be rewarding for its own sake too. And fourthly, learn how to take breaks. Sometimes when you work on building up discipline, you can actually become a bit too focused and in some cases obsessive. Sure, some of the most successful people in the world, be it business owners, musicians, or sportsmen and women, are so successful because they are so obsessed with what they do. However, it is dangerous to start trading too much like a robot, since you are a human being. If you find yourself at the computer all hours of the day and night without taking time off to enjoy yourself and be with friends and family, you need to also discipline yourself to take time away from your trading. During your time off, you should think about other things and not just your trading. Habit 6. Be optimistic but realistic. Now, as I mentioned in habit 1, you should treat trading like a business, and with any business, you should have goals and plans on how to ensure that you achieve these goals. And sure, it is great to have big goals, but you should be realistic, at least for your short-term goals. And remember that these goals should be exactly that, goals and not dreams. Now, a dream can be described as a series of images, thoughts, desires, or emotions that pass through your mind. But a goal is something that is smart. So what do I mean by smart? Well, your goal should be, first of all, specific. So what exactly is your goal? Define your goal. It should be measurable. How are you going to measure the success of your goal? Thirdly, it should be attainable. So is it actually attainable or achievable? For example, it doesn't matter how good a trader you are, you will not make £1 million in your first year with a starting trading bank of £1,000. Fourthly, the goal should be relevant. Now, the goal you pick should be pertinent to your chosen field or should benefit you directly. And finally, your goal should be time-bound. So there should be a specific time frame or time frames by which you should achieve certain milestones. So be optimistic, but be realistic and ensure that your goals are specific, measurable, attainable, relevant, and time-bound, and not simply just dreams. And finally, habit 7. Now, a highly effective trader follows this mindset. You can only control yourself and not the market. Now, losing traders mistakenly believe that mastering the market with a decent strategy itself is the key to winning. They fail to realize that the market cannot be mastered. You can't control the market, be this the Betfair market, Forex markets, or the crypto markets, unless of course you're one of these so-called crypto whales who essentially hold so much of a particular cryptocurrency that they can control the entire market. But what you can control is yourself and what you do in relation to the market's actions. Now, highly successful traders realize this fact and put greater effort into mastering themselves and their trading actions than they put into trying to master market analysis. Now, it's not the market analysis that isn't useful, it's just that the amount of available information available to consider, as well as the number of different technical or fundamental indicators, is virtually endless. Plus, what's significant at one point in time may be utterly insignificant at another point of time. It's all just too much information to sort out and ultimately impossible to deal with perfectly. A trader's time is better spent on mastering themselves and their trading skills. So to conclude this video, I'd like to leave you with a couple of lines. Make the commitment to becoming a highly effective trader, and that will enable you to become one. You can do it, but it's up to you, not the market, to put money in your pocket. I really hope you enjoyed the video. Please hit like and visit my channel and subscribe for more videos. And if you'd like to begin your journey into tennis trading, then please visit protennistrader.com, where you can sign up to my free online video course, An Introduction into Tennis Trading. I'll see you soon.